Kura rangatira mā, tēnei taku, mihi atu, kia koutou, tēnā koutou, tēnā koutou, tēnā tātou katoa. Welcome, distinguished guests, those here in person and those who are attending remotely online via Zoom. Ko Mark Hickford taku ingoa, ko o tai toi ta tariki o te Herenga Waka. I am the Pro-Vice Chancellor of Government Law and Business here at Te Herenga Waka, Victoria University, Wellington, and my name is Mark Hickford. It is my distinct privilege to welcome you all to this Tax on Tuesdays event, hosted by the Child Poverty Action Group, the Institute for Governance and Policy Studies of Victoria University, Wellington, and Tax Justice Aotearoa. We are honoured to have as our guest speaker the Honourable David Parker in his capacity as the Minister of Revenue, and not, I have to say, in the many other responsibilities he has the obligations of discharging in the current government. To that end, he will speak on the questions of shining a light on the unfairness in the taxation system. He will speak on the role of taxation in the context of a thriving and fair society, and will elaborate on the need for a principled approach to policies on tax. After approximately 30 minutes, the Minister will open the session up to questions and answers from the audience. First, however, I also wish to acknowledge the presence of Louise Delaney, Co-Chair of Tax Justice Aotearoa, who will officiate the session and coordinate the question and answer segment of this afternoon event. Before I invite her to join me at the podium, could I ask each and every one of you to join me in welcoming the Minister in the customary fashion? Thank you. I'm now very grateful to call upon Louise. Thank you.
No mai, Minister Parker. Tēnā rawa atu koe, Professor Mark Hickford. Tēnā koutou katoa. Ko Louise Delaney aho, na Tax Justice Aotearoa, and yes, I am chairing the meeting. I welcome you all, and thank you very much. Most of you, we have a big room, and so social distancing and physical distancing is really very easy, so that is great. We are, of course, extremely grateful to you, Minister, for coming along to talk about tax fairness, absolute centre of Tax Justice Aotearoa's kaupapa. So we're really, really very, very keen to hear what you have to say. We've got lots of people here today, some of course and mostly remotely, about 200 registrations, which is fantastic. And so people are aware very much, I think, of the importance of tax in our society today. Possibly they should become a little bit more aware, but you know, what there is really fantastic. Thanks very much, Minister, and over to you.
Tēnā koutou katoa. Thank you to the Tax Justice Network, to the Institute of Policy Studies at Vic, to the Child Poverty Action Group, and others that have been involved in the organisation of this event. I did want to host it here, the speech to be hosted here. I find that in my current role it's much easier to present in other venues which are all too willing to host me, and they're all appropriate, but it seemed appropriate that this be in front of an audience worried about some of the injustices in the current tax system. Can I acknowledge in particular Max Rashbrook. Max, you've been doing admirable work for your country to make New Zealand a better place. Some of you may have seen that I got him to sign my copy of his book, and I recommend it to others. You know, in his own way, Max is our equivalent of Thomas Piketty. It looks like not even Thomas Piketty is going to get the Nobel Prize for Economics, even though he deserves to. I suspect we're not going to either, and it's a thankless task often, Max, and I appreciate what you do. Can I also thank Mark Hickford for the introduction. Those coming here expecting announcements of new tax policy will be disappointed because none are being made. We've got no secret plan to introduce a capital gains tax, nor a wealth tax, nor a deemed income tax, nor others. IRD is not doing work to even develop these or other options. Today is nonetheless important in that it sets out new foundations for tax policy and explain some of the work that I have I've asked Inland Revenue to get underway, so as to better understand the outcomes of our current tax system, outcomes that are currently opaque. Tax isn't always exciting, but I'll try and keep you awake. It's no coincidence that wealthy countries perpetuating virtuous cycles of a high standard of living and peace all have substantial government programs funded by substantial tax revenues. Taxes pay for services which make society prosperous, fairer and peaceful. An educated population with good health and longevity, the maintenance of the rule of law, and even the collection of reliable statistics to measure progress and problems are all crucial to the functioning of modern prosperous nations. That's why I advocate for fair taxes, as little as possible, but as much as is necessary. New Zealand is not a highly taxed nation. We sit in the middle of the OECD for total taxes. Our taxes don't change hugely as a percentage of GDP over time, and they've ranged between 30 and 36% of GDP in recent decades. Boom times and recessions often have a larger effect than government changes to tax policy. Even now, after the trauma of the COVID pandemic, New Zealand's taxes are about 32.2% of GDP, which is close to identical to the 31.6% of GDP under national in 2012 after the GFC. Contrary to the heat generated by the debate over the last few percent, there is widespread support for taxation. Voters cast their votes in support of taxes for a mixture of reasons. Some are altruistic. The golden rule common to most religions is do unto others as you would have them do unto you. Caring for fellow members of society is a core value of all people, whether or not their values are faith-based. Voters overwhelmingly believe everyone is better off with an educated and healthy population, and they know both cost money. It's more than just altruism. They accept the community as a whole is worse off economically and socially if education or health services cannot be provided to those who need them. Taxes fund the justice system, including police and the courts, needed to protect people and to uphold property rights. Those with lots of wealth obviously want to protect what they have against the huge loss they can incur if society becomes so unequal and unfair that those left out rise up and refuse to recognise their property rights. Short of that extreme, most of us prefer taxes to the crime and discontent which can fester if people can't get by. Voters support tax policy doing more than just funding what government spends in a particular year. They accept that governments like them should put money away for a rainy day. The fiscal effects of tax enable society to smooth out the highs and lows of the economic cycle. By running surpluses in good times, in the hard times, education, health and benefits, the police and public services can all be funded. These so-called automatic stabilisers bolster the economy in downturns, helping societies endure those recessions with less hardship while maintaining the social contract. The COVID support payments in the past 2 years are the most obvious and successful example of this in decades. Our world-leading health and economic response to the worst pandemic in 100 years relied upon them. So the dark cloud of COVID has had an unexpected silver lining. Public and media attitudes towards the importance of those occupations that have been traditionally relatively low paid have moved. It's underscored our reliance as a society on others, not only our nurses and doctors in our health services, but our supermarket workers, our cleaners, our farm workers, those who provide essential infrastructure from border workers to rubbish collectors, bus and truck drivers. Our reliance on each other was clear. And the assistance needed and given through wage subsidies for businesses affected by COVID and by the lockdowns illustrated the importance of state support for both individuals and at times enterprises facing adversity. This has improved societal understanding of the important objective of tax to redistribute income, as well as the cost of public services on a socially acceptable basis. And this objective extends to avoiding extreme concentrations of wealth, most often given voice in New Zealand via politicians concerned about decreases in home ownership rates. Addressing and balancing all of these objectives on a socially acceptable basis means a basis upon which voters support. Most of us want the vulnerable protected from poverty, not just because it's the morally proper thing to do. We recognise that but for good luck, any of us or our loved ones could be in need. And we don't want to be like the USA, where a leading cause of bankruptcy is unpaid health bills. We want opportunities for advancement for ourselves, our families, and our friends. Voters also want a tax system that makes the economy stronger. This is more often than not a major theme of every election. When asked what the most important topic to voters at election time, Bill Clinton famously summed it up. It's the economy, stupid. Voters understand that, at least at a general level, tax shapes the economy. Politicians, fourth estate commentators, unions, business groups who advise voters all tell them that taxes don't just affect their take-home pay, but savings and consumption, investment, and the strength of the economy. Taxes affect investment returns, and bad laws can distort investment into speculative asset classes rather than enhancing investment in the productive sectors that create jobs and in exports. Overall, voters want their tax system to be fair, and so do I. The eternal challenge for politicians who want to improve the system is to convince voters that any proposed changes will be fair to them while making the economy stronger and society better. If we fail to do that as politicians, beneficial changes to the tax system can be hijacked by those whose self-interest is adversely affected, and they can squawk pretty loudly. This propensity to misrepresent tax changes is why the tax switch language used so forcefully and effectively by Bill English to defend the 2010 increase in GST and reductions in income taxes. While I did not agree with the proportion of that tax switch that went to higher income earners, the way he carried that debate was a masterclass in the politics of changing the tax mix. Those opposing change sometimes fund campaigns via intermediaries who, in my experience, their grasp of economic theory and settled tax principles at times evaporates when it comes into conflict with the private interest of their funders. While many leaders, and Gareth Morgan and Sir Stephen Tindall are two brave examples in New Zealand worthy of mention, so while many leaders rise above their self-interest and advocate for improvements, some don't. Opponents to change can get away with wrongly alleging that tax changes are a tax grab rather than a change to the mix of taxes. This happens even if there is no change to the total tax collected, and even when change is obviously needed. Many in this room have been advocating for changes that meet the objectives I've described above. In my view, none has succeeded. We must ask ourselves why. I believe the tax debate in New Zealand has become mired in unnecessary controversy, and I've got some foundational work underway to address that. We need to report actual outcomes against settled tax principles. Currently, sadly, we don't. There will always be political disagreement about the last few % of taxation and debates about how progressive the tax system should be. I'm not trying to avoid or blunt that. I am enjoying the current political debate, the National Party promising to cut taxes for those earnings incomes above $180,000 and to reinstate investment distorting tax breaks for landlords. That's right, those who already own multiple homes worth many, many millions of dollars would be rewarded by our opponents returning to that old habit, using the tax advantage to leverage their property portfolio even more, allowing them to buy another house by outbidding people who just want one home of their own. National is proposing to return to what even the OECD has described as New Zealand's tenants subsidising the taxes of their landlords. Far from helping the squeezed middle that National claim to champion, they are in fact squeezing them harder while cutting taxes for the better off. I believe we'll win that debate. Having made my political point and highlighted our very different approach to that of the opposition, I readily accept you can't take the politics out of tax. We can, though, have a fact-based discussion. Currently, many people look at our headline personal income tax rates and see a system that charges higher rates on higher taxable income, and they then assume that the system is progressive overall. It isn't. What's hidden is that the effective marginal tax rate for middle-income Kiwis is generally higher than it is for their wealthier co-citizens. Indeed, some of their wealthier Kiwi compatriots pay very low rates of tax on most of their income. It's rare for the debate to properly factor in the effective rate of that regressive tax, GST, as a percentage of income, or for that debate to include economic income that is currently untaxed. Statistics, damn lies and statistics. In the absence of trusted facts, it is little wonder that my political opponents can misrepresent simplistic concepts. Yet there remains a sense of unease, especially amongst younger New Zealanders who see their opportunities constrained by current inequities in the tax system. Many believe those better off than themselves can structure their affairs to pay lower taxes. But can they prove it? This is a worldwide problem, and this problem is compounding year upon year. Thomas Piketty has shown that it is certainly not the meek who are inheriting the earth. Yet Elon Musk and Jeff Bezos and their ilk, fresh from blasting into space, effectively avoid scrutiny of the low tax rates they enjoy on this planet compared to the middle-income people who work for them or buy their products. This is not the politics of envy. This is the politics of fairness. So how can voters assess who is right, and why can't we prove it? The Labor government believes it is the responsibility of government to shed light, and we will. Only IRD can gather the data needed, and now, for the first time in our history, they are. I'll deal first with the serious shortcomings of current data and the major investigation that's well underway to fill those gaps. And then I'll turn to how we're grappling with reporting to the public based on that research in accordance with settled principles which I believe should endure. So, first, what are we doing about data inadequacies? We have poor data on the distribution of wealth and capital income in New Zealand. Via the census, we gather information on home ownership, which is reliable. We have very good data on the earnings of salary and wage earners. That data is collected every payday and forwarded electronically to IRD. Dividend and interest earnings are also well understood. So far, so good. But we have two big gaps. The smaller of the two relates to GST. It's easier to solve and less significant, so I'll cover that off quickly first. We have a good and largely automated system underlying the GST payments that are due to IRD. However, we have a much more limited understanding of how much different groups in our population pay. While GST is collected by businesses, they pass that cash cost on. The actual cost is borne by those who buy GST inclusive goods and services. Thus, GST is really paid out of our earnings when we spend them. In economic terms, GST is mainly a tax on labour. Who bears that cost? Well, data is limited on the effective overall GST rate paid by New Zealanders. We really don't know this very accurately by either income or wealth decile, particularly at the top end. I've asked IRD to remedy this. I expect we'll be using the best data we have rather than collecting more. Statistics New Zealand gathers some spending data. Analysis of that data will help. Perfect analysis is complicated by lifetime income, savings and consumption patterns, which differ by age for some deciles more than others. Nevertheless, we've got to use the data that we've got to the best of our ability, and I expect it will show trends by income and wealth, which we may be able to extrapolate for higher income and wealth groups that are not well measured in the surveys that underlie the data that we do have. This is a bigger issue for New Zealand than most other countries because with our broad GST system, we have one of the highest proportions of consumption tax as a proportion of total taxes in the world. Now, I support our GST system, but it is regressive. While not all taxes need to be progressive, the system overall should be. We can't properly assess our tax system without knowing the effective GST rates that we have for different cohorts in New Zealand. So we'd better analyse this. The second gap is larger and, in my view, a more serious one. We have virtually no idea of what rate of tax is paid by the very wealthy. As wealth concentrates into the hands of an ever smaller cohort at the very top, more and more of their income and a greater proportion of national income is represented by returns on capital. How much this amounts to and how much of it is taxed or untaxed is currently unknown in New Zealand. Our statistics are worse than Australia's and Europe's. Our rough measure of net assets suggests that outside the family home, 65% of all wealth is held by the top 10%. In fact, it could be that more than 2/3 of all financial assets are held by the top 5%, with most of that concentrated in the top few percent. I said that the 65% held by the top 10% is a rough measure because it is undoubtedly an underestimate based on the Household Economic Survey, which has severe limitations at the top. Until recent years, most people thought the Household Economic Survey was pretty reliable. In fact, it's close to useless in disclosing the wealth or income of the top few percent. In Capital in the 21st Century, Thomas Piketty made the point that countries that rely on surveys and don't actively monitor the affairs of the very wealthy have greater wealth inequality. He explained that survey measures of wealth don't work at the top end because survey questions are too general to burrow into the multiple and complex discretionary trust and private company legal structures used by the very wealthy. Questions don't delve into capital income. Valuation methodologies are inconsistent. And at the top end, there is a propensity to understate when making disclosures to government agencies. When I delved into our survey measure, we proved that the highest net worth ever surveyed in the Household Economic Survey was $20 million. The NBR Rich List is a better data set than the official statistics. I was not surprised, but I was still shocked. A 20 million max? Really? How come in a country with billionaires, our data set used for policy purposes effectively ignored the wealthiest? It's not out by a factor of 10. That would be huge in itself. But that maximum is out by a factor of hundreds. Now, the tax working group did not have the power to find out the underlying truth, but they did report the problem in their reports to government. When I became Revenue Minister, I discovered that intermediaries holding data on the 1% who owe duties of confidence to their clients did not provide information to IRD not needed for tax administration. They could say, all taxes properly payable are, so bugger off. It beggars belief that we currently do not know what rate of tax is paid by the top cohort in New Zealand on their economic income. We do know the rate paid by wage and salary earners and by small business owners. I was advised that the UK Revenue Department has an information gathering power for policy purposes, not just tax administration. Other countries already collect the information because they ordinarily tax capital income in some way. I concluded we were an outlier. That's why in last year's budget, we moved to address this data gap. Parliament conferred this much needed information gathering power on the Commissioner of Inland Revenue here. And Inland Revenue was allocated with funds to conduct research relating to the tax paid by the wealthiest New Zealanders relative to their economic income. And I'm pleased to advise that this work is now underway. It has attracted ill-informed speculation on the government's motives, which is why I emphasised at the start the government is not secretly working on new taxes. Rather, this research is about improving the evidence base about how the current tax system actually operates. This information will inform future tax policy advice, and so it may feed into future tax policy development. The project is not targeted at specific individuals, and no individualised information will be published. Inland Revenue has put many safeguards in place to protect individuals' privacy. The information collected will be securely held separately from Inland Revenue's other systems. Only officials working on the project will have access to the individualised information, which will be destroyed at the end of the project. Information gathered will not be used in assessments either for current or future taxable income. What it will do is allow any future tax policy development to be based on solid evidence. There was consultation with the Privacy Commissioner on the ground rules for the information collection, and an advisory group has been formed to help refine the methodology to be applied. Compliance costs are being managed appropriately. Some information is already held, and new valuation information is not being sought. Following a screening round of consultation, the IRD has now sent out a request for information on the very large number of legal entities owned by the individuals in the research group. I thank those who are cooperating with this research. I admire the creativity and the energy of our successful business people. I've worked with many of them over the decades, and I respect the role they play. But I believe we should all pay our fair share. While we already have evidence that the wealthy pay lower rates of tax than middle-income earners, no one can tell you how much lower the effective tax rate is. Until we have a more accurate picture about how much tax the very wealthy pay relative to their full economic income, we can't honestly say that our tax system is fair. I think the gap will shock some people, but whether my instincts are right or wrong will be proven by the data. It will mean that in the future, our tax policy advice is better informed, whatever the political stripe of the government of the day. This leads to the second leg of the double. How should we use this data? Put another way, what principles should we assess tax policy against? The Tax Principles Act. I think we need a route to enable improvements in our tax system, and a Tax Principles Act will work. It surprises some who witness the heat of tax debates that there's widespread agreement about the core principles. These are long settled. Adam Smith, in his 1776 book, The Wealth of Nations, laid out 4 maxims that still apply. Successive tax inquiries over many decades in New Zealand and in similar countries overseas have all enunciated similar principles. The 1982 McCaw Review in New Zealand, the 2001 McLeod Review, the more recent 2019 report of the Tax Working Group. In Australia, the 2010 Henry Tax Review, and in the UK, the 2011 Murley's report. They all endorse the same principles based in that most core value of New Zealand, fairness. The main settled principles are horizontal equity. Those in equivalent economic positions should pay the same amount of tax. Vertical equity, including some degree of overall progressivity in the rate of tax paid. Administrative efficiency for both taxpayers and inland revenue. And the minimisation of tax-induced distortions to investment and the economy. New Zealand is renowned for our Fiscal Responsibility Legislation and Reporting Act, now in the Public Finance Act. It's served us well. So do reporting frameworks for child poverty and climate change. In all these areas, we know what direction our country is headed, enabling voters to judge against promises made. I find it anomalous that for the most core of government functions, the collection of tax, we have no equivalent. Little wonder our debate is so easily sidetracked by opinion and conjecture. Political parties will genuinely disagree as to how to best apply tax principles, and voters need to assess their proposals. A reporting framework will help both. Our proposal is to require officials to periodically report to ministers or the government about the operation of the tax system using the principles as the basis for their reporting. As to how these or other principles are expressed, we seek something that New Zealanders of all stripes can see value in retaining and protecting. They need to be clear enough to avoid ambiguity without determining outcomes that are political. In New Zealand, we have the advantage of a number of previous tax inquiries. The advice they prepared can be drawn upon as to what could be widely accepted tax principles for New Zealand. Now, lots of people have strong views on what tax policy should seek to uphold. Many hold opposing views. The trick will be to find that higher level common ground from which information can be reported and upon which the debate can be had. Currently, the project is in its early stages, and I'm discussing this with officials in the Treasury and IRD. An important stage of the project will be wide public consultation on the proposed principles and the reporting framework. And we'll be doing that around the middle of this year, and I hope you'll share your views. While the Public Finance and Child Poverty Reduction Acts require the government and officials to report on specific issues within a legislative framework, the approaches which they take differ. Where the Public Finance Act requires the government to prepare financial information according to widely accepted accounting measures which develop over time, the Child Poverty Reduction Act's reporting measures are closely prescribed within the legislation itself. In the context of a tax principles statutory reporting framework, this could mean a set of high-level general principles in the legislation, with a legislated requirement for the government to issue a guiding statement setting out its views on the development of tax policy. Tax policy officials could be required to independently report information relevant to those tax principles. It could also entail more detailed principles and defined measures in legislation, with officials reporting according to those defined criteria with a focus on the data or the controversies of the day. For example, it could require officials to report on the progressivity of the tax system, not whether it should be more or less, just what it is. I will be reporting closely with officials to develop an appropriate methodology. A bill will then be introduced to bring these into effect and set up the reporting requirements. I'd like to see these principles enacted in a bill before the end of this current parliamentary term. If Parliament passes it, the Tax Principles Act will take its place alongside the Tax Administration Act and other revenue acts to create the tax system that New Zealanders can understand and be proud of. I believe these two projects are important. They will result in a stronger economy, a fairer tax system, and a better New Zealand. I very much appreciate the time that you've taken to come here today. Thank you, and I'm happy to answer some questions.
Kia ora, my name's Simon Lewis. My observation is that Labour is very good at talking the talk, but when it comes to concrete measures, they fall far short. And I suggest that your wild goose chase for more information is a complete waste of time, because we had the tax working group which came out with a unanimous decision to introduce a capital gains tax, and you completely ignored it. We still have all the building blocks of neoliberalism, like no inheritance tax, no wealth tax, no gift tax, and so on. I think that you're just basically wasting your time, and the goal of trying to get a fairer and equal society is just gone by the board.
Well, I'm sorry you feel you've wasted your time coming along.
I haven't wasted my time coming along.
Just in terms of the delivery point, I obviously can't let that pass without reacting to it. You know, when we came to office in the midst of a housing crisis, 10,000 houses per annum were being built in Auckland, 20,000 per annum are being built. To bring that about has required a really sophisticated change in tax rules, funding of infrastructure, planning rules, new national policy statements under the RMA, but it's worked to double housing output. So it's not true that we have failed to deliver. The other one that our political opponents have a crack on is mental health services, community-based mental health services, which was what our promise was to improve, are available in a way that has never been available in New Zealand, and good progress has been made there. In terms of our inability to deliver a capital gains tax following the tax working group, you'll be aware that we couldn't get the parliamentary votes to get that across the line, and that's why it failed.
Thanks very much. I don't know actually if the tax working group was 100% unanimous in their recommendations, although I certainly supported them, but yes, they weren't. We'll just go now to someone from, and if we could get reminded of their name and...
Right, we have a question from Linda Hill. Will the Minister be adding a question to employer wage tax returns on hours worked and start using ANZCO categories that will allow public information about average occupational hourly pay rates in support of gender ethnicity pay equity?
It's a very specific question that I don't know the answer to, but I'm happy to look into it.
Sure. The question I wanted to ask was, when someone earns $48,000, their tax rate for their marginal income is 17.5%. When they earn $1 more, their tax rate increases by 71% to 30%. How do you see that working?
Well, the first point I would make is that there is a common misunderstanding amongst many that when that change to income threshold happens, that every dollar that they have earned is taxed at the higher rate. That is not the case. And the person that owns $1 more pays a few cents extra on the next dollar earned. So marginal tax rates apply in brackets. And I know that you understand this well, but I make the point because many people don't. Your question is what, if I could restate it, is what do I think of the progressivity of existing tax steps at that income threshold? Well, actually, I'm not here to talk about that. And I really don't want to get sidetracked into it, because what I'm trying to do here is actually make the point that there's lots of income that isn't taxed at all, but we don't know how much that income is, and we don't know what the effective tax rate is. And that's a bigger issue for me.
Right, I'm Jeff Bertram. Your 4 principles that you've enunciated are all cross-sectional. That is, at a particular point in time, you're looking at horizontal, vertical equity and administrative simplicity and so on. It seems to me that what's missing is an intertemporal dimension.
A what?
An intertemporal, over time.
Yeah.
To look at particularly things like inheritance and gifts, that is wealth transfers, which perpetuate wealth inequality through time. And I'm hoping that your investigative exercise will indeed throw up more information about the size of inheritance and the extent to which we are transmitting wealth from the current wealth cohort, which may well be filled with your worthy business people, to their inheritors who may very well not be similarly deserving.
I agree that you've got to take a lifetime analysis of income and tax, income as most broadly defined, and that you've got to look through some of the changes through time in order to get a fair picture. Most people, when they're young, don't have much income, as assuming that they're not the bottom cohort, or the lowest paid cohort, I should say. They then accumulate generally in their middle years, and then they spend it as they get older. That's not true of all cohorts, which is the point that you're making, Jeff. How much information we'll have on that as a consequence of this research project is not clear. It's not primarily looking at intergenerational wealth transfers. It's actually looking at what income is and taxes relative to economic income. So it's not primarily about inheritance.
Len Cook, David, on your question of wealth surveys, of course, there's a whole body of knowledge for about 30 years indicating the limits of them at the top end. And the work that's been done in New Zealand in the past by Brian Easton drew heavily on estate duty, inheritance tax. And in fact, pretty much all the countries with good wealth statistics have the type of taxes that bring it. There is an alternative, that you could introduce a regulation that requires information to be provided to organisations such as tax with more punitive powers than the government statistician to simply report on major estate duty transactions and other such things. We investigated this in the early 90s when we lost the foreign exchange regulations on balance of payments and needed information that was not available from surveys. And therefore I suggest you could now initiate regulations without changing the tax system to collect a lot of the information you need. Just a helpful thought.
Now, the man behind that mask, I think, is a former government statistician, is it? Could you just name his name? Have I got it right?
You certainly have.
Please.
Name yourself, please.
Oh, Len Cook. Sorry, I thought I had.
Hello, Len. The reason I asked you to do that, Len, is you're a person of credibility on these issues, and you're quite right that one of the ways in which data in respect of these areas used to be collected was when we had gift or estate duties. Then people who had large estates or were making large gifts, and I'm not sure whether it applied to distributions of trusts because they weren't necessarily gifts as opposed to gifts to trust, but there was some information that was available to public authorities, but also to academics to analyse what was happening. Now that we have no taxes of that type, we don't have a record of that information. And you're quite right that that has been pointed out internationally, including in New Zealand, by academic scholars, that we are, as a consequence, blind in New Zealand in a way that most countries aren't. And I think that that's one of the reasons why this research that we have got going here is even more important in New Zealand than it is in those other countries that have already got better data sets. Your regulation making point is an interesting one, and I hadn't thought of it, so thank you.
It came from Ruth Richardson.
My name is Grace Tualolele. I'm an economics or public policy student. I just have 3 questions, 2 short, 1 relatively long. The first is, why do New Zealand governments have such an aversion to hypotheticated tax as a means for ensuring that the revenue generated is guaranteed to go directly back into the pipeline for reinvestment?
Hypothecated taxes have never been popular in New Zealand except in narrow circumstances. We do have some hypothecated taxes. The taxes that we collect through road user charges and excise duty do go back into road and into transport services, including roads and public transport. And we as a government are also hypothecating revenues from the emissions trading scheme for people that use the fixed price option and pay the government in respect of their emissions liabilities. We're moving towards using those funds for those purposes. Beyond that, there are limits to the utility of hypothecated taxes, and we don't have a history of them in New Zealand. Go back, way back when, we actually used to have a hypothecated tax for the equivalent of superannuation back in the day, but that's more than half a century ago.
That leads me to my next question, which is, given that super spending at just under $50 billion per annum is the largest area of core Crown expenditure, is a means test for superannuants on the horizon, or is the rest of New Zealand expected to subsidise home ownership for the largest group of beneficiaries during a housing crisis?
Well, I don't necessarily accept the with respect, simplicity of the assertion that you had at the end of the end of your question, but in respect of, are we proposing to means test superannuation? No.
And finally, with our country being one of the worst in the OECD for revenue from tax generated by income, why are you not willing to explore further corporate tax?
New Zealand's tax rate, corporate tax rate system is high relative to a lot of other countries, but is, in my view, not inappropriately high. There's a lot of countries have a lower tax rate, but then don't give credit for tax that's paid on dividends that are distributed. We choose to have a higher corporate tax rate and give credit for tax that is deducted on dividends that can be credited against people's income. That works well economically for New Zealand, in part because we have high levels of foreign direct investment in major parts of our corporate sector. If we were to move to a system that had a lower headline rate and didn't give credit for tax on dividends, we would effectively be sending a big check for effectively lower income taxes on the owners of those overseas companies that invest in New Zealand.
My name is Jackie Chong. I have a question on tax, health and planning. I believe the tax collected support the health system. In the recent years, we have COVID-19 pandemic, and then the extra expenses like vaccination, PCR tests, IAT tests, and all that. All this money come from the reserve where we have a contingency plan to pay for emergency problem like pandemic, or is unplanned?
During the COVID pandemic, the government has run a government deficit, as the last government did actually post the global financial crisis. So that's normal when you have a crisis that you effectively dip into your reserves, borrow some money and repay it again in the future. So in order to get through the pandemic, we have borrowed money in New Zealand. I think virtually every country in the world has.
My first is that the principles that you've enunciated are, as you say, well known, really sensible, really great. But I wonder if I'm sure the issue has come up in your group, whether to talk about the Treaty of Waitangi as another principle, and more specifically, whether in your preliminary consultation at this point with officials, whether specific issues relating to both Māori and other groups, with possibly consultation with representatives in relation to tax and Māori, have been considered.
Well, we'll consult with everyone, and everyone means everyone, including Māori. Look, I don't think you need a treaty clause in tax principles legislation in order to get better outcomes. If your question was, do I think it's fair that Māori are overrepresented in lower income and wealth deciles? No. Would this information reporting highlight that? Probably. And should it? Yes.
Kia ora, Minister. I'm Anna from One News. So you talked about just needing clear foundations when talking about tax with the public. Do you think that could be one of the reasons that the capital gains tax didn't come across with the public that well, or that it failed? What do you think?
Currently, it's really opaque. It's unclear in New Zealand who pays what tax. We need to have good information so that people can properly understand whether some people are paying more than they should relative to others, and whether some people are paying less than they should relative to others.
And just
Do nothing about it.
And just on what you said about Sir Bill English being able to sell unpopular tax, well, how much pressure does that put on you in having to be a good salesperson in this?
Well, this isn't actually about a sales pitch for new taxes, because we're not planning any. And we've emphasised that again today. It's trying to provide information to the public as to who is and isn't paying tax.
We have a question from Dougal McTavish. Would accounting for emissions inside the tax system be a practical and reliable way to profile and monitor our progress to a low carbon economy?
Not through the income tax system. Emissions pricing is very important to encourage people to invest in lower emission forms of production, and to change the signal that we all receive when we're choosing to buy products that either have high or lower emissions. But I think that properly sits within the emissions trading scheme rather than the Income Tax Act.
Kia ora, Annika from RNZ. Two questions. One, why don't we have the data?
Why don't we what?
Yeah, to the best of your knowledge, why haven't we been collecting this data? And two, why now? Are you making moves to collect it?
I think one of the reasons why countries around the world haven't gathered good data on this is that there's some pretty powerful interests that quite like these answers being obscure. I also think it's a problem that has compounded in recent decades. This was not a problem in the 1970s and 1980s, but it's a problem that has escalated in the decades since. It wasn't until academic writers started to identify the seriousness of these problems in the last decade or so that this became a heightened issue of public and political concern.
And why now? Why have you moved to give money to IRD to investigate this now?
For me personally, the answer to that lies in that I read a lot of the international academic literature, and I became convinced that there's a serious gap in the data, that there is a poor public debate as to whether the tax system is truly progressive and whether the tax system is fair. I have witnessed many debates on these issues in New Zealand that have frustrated me because they distort information, and that distortion is able to occur because there isn't reliable data. So if we get reliable data, we can have a fact-based discussion.
Kia ora, and thank you, Minister. My name's Russell Tregoning. Our Prime Minister says that she won't have a capital gains tax on her watch. What do you think about that? Would you have it on your watch?
I'm in hers, so that answers itself. So, no, the Prime Minister's made that statement, so we'll adhere to that.
My name is David Butcher. Is there any evidence to suggest that the slowdown in the rate of increase in house prices has anything to do with the removal of the deductibility of interest payments on second, third and 35th other house that certain investors have benefited from. Thank you.
It's hard to prove correlation. Correlation doesn't necessarily prove cause and effect. But I was interested to read just this week in Moody's reassessment of New Zealand's credit rating, which they held at their highest rating for a nation. They said that they thought that the changes to interest deductibility for residential investment, existing residential, not new, could be one of the reasons in their view that the housing market has slowed down.
This is a question from Simon Moody. Is the plan to collect and analyse this data in time to formulate some responses to the findings in time for the next election so that the voters understand what you propose to do about the issues it may present?
Well, I've certainly think that democratically elected leaders need to bring to a head issues that the public need information on. So I'm expecting that there will be information as a consequence of this inquiry available to all political parties by the time of the next election.
And I've got one more question here while I've got the microphone.
This will be our last.
Yep.
From because of technical class coming in.
Oh, okay. I was holding them up. Sorry about that.
Okay, Terry Boucher, do you see any opportunity to use the fringe benefit tax system to encourage lower emissions?
Thanks, Terry. Look, I'm not going to take a call on that today either because I didn't come here to make any announcements about tax policy. I'm just trying to improve the information base so that we can make better decisions on tax as a country in the future.
Well, Minister, thank you very, very much indeed, both for giving us a heck of a lot of your time, a really well thought out, beautifully prepared and thoughtful, that's what I really liked about it, speech, demonstrating a heck of a lot of reflection on your part and with your officials. So thank you very much for that, and I look forward to reading it as well. I hope that we will have that opportunity.
Sure. Thank you.
So thank you.